Okay, good morning, everyone. My name is Sanjay G. I'm the founder and CEO of FinClub. We apologize for the slight delay in starting the webinar. As you would guess, the excuse is usually the technical glitch, but here we are, ready to start. So thank you for those who are attending, for those who are listening to us through various media, various social media and so on. So we will obviously invite you, should you have any question, any points that you would like to raise, feel free to post your question to us so that we can, as we go along, try to reply to them. So basically, today's webinar, as it was mentioned already, is about peer-to-peer lending, FinClub peer-to-peer lending, and how are you going to optimize your investment, your return through peer-to-peer. But first, it is important to understand why peer-to-peer, what it is, and this is what our journey will be today, and how we are going to take you through, and so on. Okay. So please, can we share the screen, the PowerPoint, please? So the question basically is, how about the investments? Let me see. There you go. Thank you. So we are obviously talking about, is your money working hard enough for you? Okay. In terms of your return, in terms of the risk you are taking, and obviously in terms of, but more importantly, how FinClub peer-to-peer lending platform is able to provide you with various alternative and possibility of investing through different options, different channels. So this morning, our agenda basically, we have got four series of things we are going to tackle. Number one is, borrow. So what is peer-to-peer and borrowing through FinClub? Number two, being a lender. What does it mean being a lender on FinClub peer-to-peer lending platform? How we help you protect your investment and obviously maximize your return. And as mentioned previously, we definitely will allow some time for questions. So if you do have any question, feel free to send the questions through the various media that has been posted, but also you can send it by WhatsApp, by WhatsApp 52527400 as well. Okay, so let's take the first thing, borrowing through FinClub. The thing is, why someone should come on peer-to-peer lending platform, and is there a possibility of what is the unique selling point? The question, the thing is very simple. Basically, the question is, what if you urgently need 20,000 rupees? Within a few days, you need 20,000 rupees. Many people would say, okay, let's go to a financial institution and so on. But unfortunately, most financial institutions do not lend less than 100,000 rupees. Actually, some even go a little bit down, but they would not go less than 50,000 rupees. So if you need, let's say, 20,000 rupees to pay for fees, for an educational purposes, for have a health, for have a intervention chirurgical, have a health issue, it becomes kind of difficult really tackling these issues and therefore having the money to at hand, even in terms of, for example, renovation, where you are using the money in several other places, spreading the money between different suppliers and so on. So this is where the issue becomes. As I mentioned, most financial institutions do not lend less than 50,000 rupees. And then even if they do, the pricing, the interest rate, for example, payable is anything between 12% to 18%, depending on what type of consumer loan you are taking. If you're talking in overdraft facilities, anything between 12 to 16%. If you are taking a consumer leasing loan, a lease, typically interest vary around 15%. So it can go a little bit down, but typically it can go like 18% as well. So therefore, you can see that the possibilities, the opportunities really is limited. And that's explained why many people nowadays are becoming kind of underbanked, okay? Underbanked because if they have to apply for a loan, first they might not be these loans might not be accessible. Remember that the average Mauritian earns about 34,000 rupees. So they are becoming invisible to various financial institutions. Also, it will require that you physically go to a bank, maybe once, twice, three times, and so on. And therefore, creating the problem. But finally, also, this is the net result is many people are becoming financially invisible, if you want. Their credit history becomes invisible, and therefore having access to finances become a little bit complicated. And then if you look on the other side, imagine you have 20,000 rupees and you would like to invest it somewhere. Okay, you would like to invest it somewhere. You agree with me that the choices are limited. Okay, savings, for example, okay, you can put it in a bank and the savings or other institution. The interest rate these days, is about, I would say, anything between 1 to about 1.5, 1.7%, depending on which financial institution. You obviously, it's too small a sum to invest on stock exchange. You obviously have other fees and commissions to pay. If you're investigating cryptocurrencies, the volatility of these currencies make it quite tough, make it quite difficult that when you put your money, you do not really know what is going to be the return after a year or so. So as mentioned, the limited options basically is putting the money on saving account, but you can obviously try to earn a little bit more by putting your money on a fixed deposit, for example, 3 years, 5 years. Then the interest rate goes a little bit up, higher, between 3.5, depending, the tenor. The difficulty, the problem is your money would be tied up for maybe 3 years, maybe 5 years. Therefore, it really kind of becomes a little bit complicated in that respect, okay? Because you have to wait for 5 years to get both your money, both your capital and the interest that goes with it, okay? So there are definitely some limitation for investors. So that's how, and that's where the FinClub peer-to-peer lending model become interesting. At the moment, we are, as a lender, we are taking only individuals, but very soon, toward December, beginning next year, we are going to have institutional lenders onboarded as well as company. And we are currently also giving loan mostly to individual or group. Let's say, if you want a joint loan, that can also be entertained. So for the time being, we are targeting mostly individual. Those individuals can be salaried employees, they can be in whichever sector, they can be self-employed, but also they can be retired person, provided you can prove that you have got income being generated um, on your bank account. So this is peer-to-peer lending, therefore putting together, putting directly lenders, connecting borrowers directly with lenders. There is a small film, but I will skip through that because you have that film available on FSC platform. This is a film by FSC. So it would be probably, for those interested, you can go on the FSC site, peer-to-peer lending, and you would see the film is available. So let me skip that. There you go. So as I mentioned earlier on, to be able to operate, it is important to have a legal framework in Mauritius. So because it is a regulated Mauritius. So FinClub basically started through a regulatory sandbox license that was issued by EDB, but since February last year, we became the first bespoke peer-to-peer license holder in Mauritius. That license was issued by the non-financial banking regulator, that is to say, the FSC, the Financial Services Commission of Mauritius. Okay. And you would obviously say that even if in Mauritius, we've been the first one to operate the P2P lending, to have a license for the peer-to-peer lending platform, it's nothing new worldwide. As you can see on the slide, Zopa started operating in the UK in 2005. Then it went to the US through the Lending Club in 2007. But slowly, it has spread quite fast, initially mostly in developed countries. But then after a while, it really has propagated just about everywhere in Asia, where it's really big, in countries like India, Latin America, and now more recently in Africa also, because peer-to-peer lending is very much addressing the alternative investment and alternative lending, borrowing requirement of people who otherwise might not have necessarily access to finance and access to money for their own for their own personal use, or through their companies or for their businesses. And as you can see, by 2020, P2P already had a market size of about 67.93 billion US dollars, and it is expected, as you can see per Valuate reports, it is expected that it is going to be somewhere around $559 billion by 2027. That is to say, in 5 years, which really explains the exponential growth that's taking place in this sector, and how guys like yourself would be able to optimize your investment and at the same time allow people to have access to finance so that they can do, for their own prosperity, for their own development. So precisely, borrowing money, how does it work on with FinClub? We have really simplified things, make things easy and simple. We are exclusively online, so you can apply anytime, anywhere, with competitive interest rate. You would see, for example, that our loans ranges between 20,000 to 100,000 at the moment. That upper limit will be called upon to increase quite soon. The tenor is anything between 3 months to 24 months, and all our fees and so on are advertised on the platform, so there is no hidden fee. At the outset, the lender, there is absolutely no fees to pay to open account. you have absolutely no fees to maintain an account, and you have absolutely nothing to pay if you are investing with us. And also, you absolutely nothing to pay when you are getting back your money, so your investment, capital plus interest. So it's completely, the full cycle is completely free for everyone across the board if you are lending. Obviously, this means that for borrower, obviously, our business model is that we will go through, but you have to pay, obviously, a processing fee and a interest on the money borrowed. Now, to be able to really ensure that we have a system which is robust, that people are going to we are going to kind of ascertain that there is limited or no um, fraud, identity fraud. We have developed, for example, FinID, which is an AI, artificial intelligence machine learning module that kind of helping us to identify the person and identify the possibility of potential identity fraud. And also another artificial intelligence machine learning uh, module that is being developed. Basically, it is for the credit score. So it is also another automated system that we have developed that we keep on improving, enhancing, because this is why we call it machine learning, so that once we feed in data, the system update itself, relearn, retrain, relearn, and come up with an improved model. So that's the process of. So for the time being, as I mentioned, we have got two product offerings, loans between 20, so consumer loan and flexi loan. For consumer, it's between 20 to 60. For flexi, it's between 50 to 100. And as I mentioned, those um, brackets will soon be reviewed, and there will be possibility to borrow higher sums of money. Okay. The interest rate for consumer loan starts as from 9 to 9.5%, and for flexi loan it is starts from 9%, and that loan can go up to 16.5% as well. Okay. And basically, in terms of the risk, at the moment, we are only giving people who are classified in the A plus, A and B, A plus, A, B, and C risk categories. And as I mentioned earlier on, we are very transparent insofar as fees are concerned. The borrower would pay a 2% processing fee with a maximum of with a minimum of 500 rupees, plus obviously when interest when the borrower is repaying back the lenders the EMIs. From that, we keep a margin on the interest. So that's the only two revenue stream that FinClubs has to make its money. So basically, we are accompanying the investor across the board until the full the money is being recouped completely. There are basically 7 steps on when people are borrowing money on the platform. You know, the loan application. We obviously are connected to the Bank of Mauritius, and therefore we are able to obtain the MCIB reports. These MCIB and other information are fed on FinScore, which is the credit underwriting process. And on top of that, we have, a very robust, we have people who collectively at FinClub, collectively have more than 90 years of banking experience. So that advisory credit committee is able to kind of look at the loan. We obviously have the physical verification of the documents, okay, before giving the loan. So at the moment, technically, the borrower still have to come to our platform, to our premises, for us to verify that the loans, that the documents are all in order. and then the loan posted, and it is posted for up to 30 days for various lenders to fund the loan. And after, I mean, as I mentioned, the loan are posted for 30 days, but there are possibilities that, there are cases where the loans have been funded within the same day. But at the moment, we are talking roughly plus or minus 20 days to have the loan. As we proceed, as we are getting more and more lenders on the platform, that process is being reduced, and the lending time frame is obviously getting shorter. What happened for the borrower, so the lender, excuse me. So this is a new asset class for investment, okay? New asset class because you are in control. It's not you are giving us the money to manage. It's you are managing your money. You are investing on loan you choose. And that would mean that you are able to build a portfolio. Okay, we are going to talk a little bit more about it in the few slides that will come up, but it allows you to build a portfolio. It allows you to kind of look at the various, depending on your risk appetite, whether you want to develop an aggressive portfolio, a conservative portfolio. It all depends where in that spectrum you would like to. But in any case, as you can see, the interest rate payable to lender, I'm talking about what you would receive in terms of interest rate, can go up to 12%. Okay, and what's even more interesting is that, let's say for us, for argument's sake, on a loan of 100,000 rupees, you have invested 10,000 rupees. And let's say, again, for ease of understanding, you will earn 2,000 rupees of interest. So that is to say, you've got 12,000 rupees to earn out of that loan. So what basically will happen is, if that loan is on a 12-month period, you obviously are able to kind of get your money, capital plus interest, every month. So that 12,000 rupees, you would not really get it after 12 months. You will get it every month, meaning that you get, let's say, 1,000 rupees every month. This obviously means that you have cash in hand to do whatever you want, or if you want, you reinvest. So regular monthly income. Given the underwriting process we have a very robust underwriting process. So therefore, only credit-worthy borrowers are given loans. Lenders, as I mentioned, have the possibility of diversifying on various loans. So you are basically mitigating your risk. We are going to talk about it a bit more. But mitigating doesn't also mean mitigating in terms of the risk category, but also you can invest on some loans of 3 months, whilst you can invest on other loans of 24 months. So you can basically kind of go wherever you want in that spectrum, which makes things much, much easier for you. But remember, ultimately, we are in a business where we are, through FinClub, the platform, basically through our community of lenders, is also allowing people to, let's say, have money to invest in education, have money to have housing renovation, invest in health, or if you have a surgery to do, and these kind of things. So ultimately, you as a lender on FinClub platform, you are helping to unlock smiles. You are helping to transform lives of people, and that's important for people to understand that. Again, being a lender, it's a 4-step process, and I've been told by my colleagues, some people have been able to kind of, within 2.5 minutes, are able to fully register. As I mentioned, it's online. You don't have to come to our offices. Register, upload your document, and then have your account validated through a video KYC that we do. So you don't even, for the KYC, have to come to our offices. Therefore, you are able to kind of have your account operated very soon. If you are starting now, by the time we finish this webinar, you would already have become a lender on FinClub platform. So obviously, based on some of the queries, some of the question and other points that have been raised, and it's a very legitimate point to highlight, is what happens if I invest, let's say, 100,000 rupees on a loan and the borrower just run away with my money. Excuse me. Well, that's quite unlikely to happen. Why? Because number one, the platform itself would not allow you to spend to invest 100,000 rupees on one loan. Okay, you can either invest 20% of your in one loan or a maximum of 20,000 rupees. Okay, so that's one. So you do not put 100,000 rupees on one loan. That's number one. Number two, we obviously are educating, if you want, our lenders through how to optimize, how to protect your investment. So we do have webinar like this, but also we regularly on a monthly basis have a lender clinic, lender meetup, where we are able to share experiences, where we are able to kind of, look at the do's and don't do's of investing on a peer-to-peer lending platform. As I mentioned earlier on also, we have a very robust credit underwriting process, which is called the FinScore. So it is a system it is a tool that's really allowing us to kind of build our capabilities as we process. More people applying. We are using information from the MCIB, Mauritius Credit Information Bureau, which is hosted by the Bank of Mauritius, and through that, we have a continuous feeding of information. And not just that, if someone, for example, borrow from FinClub, we also have the responsibility of kind of providing that information to the Bank of Mauritius, which also means that if someone is not paying or got delayed, this means that we have to, FinClub have to report that to the Bank of Mauritius of whatever stage of that. Fortunately, at the moment, we do not have anybody who have, let's say, we do not have any non-performing loan. That is to say, we do not have any default of less than 90 days, which is a very good news, especially bearing in mind current circumstances. Obviously, it does happen. People are delayed by a few weeks, maybe 1 month or so on. But the question basically is that the how you are building your portfolio and how you are investing. So, for example, for us, given that the sophistication of our platform and the automation you are using, for us, it doesn't matter whether you have got 5 loan of 20,000 rupees, or you have decided to invest on 100 loan of 1,000 rupees. It doesn't matter because the contracts are generated digitally. They are always at hand. The signatures are done digitally, and they are always at hand. If you need any of your contract, it's on your dashboard, which you are able to kind of look at it at any time. Okay, and obviously we have a whole series of investment a whole series of reminders and automated triggers that we have that are sent to people who have borrowed money. So 1 day, 2 days before the payment of the loan, if it gets delayed by a couple of days, and so on and so forth. And therefore, you would say, okay, but how are we basically looking at that the underwriting process? And basically, what we are doing is to use three families of factors. Okay, 3 families of factors. Number one, we are looking at the capacity to repay a loan. You would agree if somebody earned 15,000 rupees per month, that person would not have the capacity to repay back 1 million rupee loan, okay, over a short-term period. So this is what we mean, So most financial institutions, including banks and so on, would use the FICO model, which we are using, looking a little bit about, the number of credit facilities that the person have taken over the last 7 years, the repayment behavior, and so on. So basically looking at financial parameters. The second family of factors, set of factors, is the financial stability, okay, and the track record. Now, that's different from number one because, example, people who were previously working in tourism sector, excuse me, people who were working in the tourism sector, and with COVID, we found that, things got decimated almost overnight. People lost jobs, people in the informal sector or working for themselves, basically, had their income kind of really trimmed down, if not completely brought down to zero. Okay, so it is therefore important that we are looking at the sector in which the person is working. We are also looking at, for example, whether the person is, or how long the person has been working in a given employment, whether there's job hopping or there's a stability of 2 years, 5 years, 10 years, or even more. And also looking at other things, for example, I would say in terms of the whether you own your own house, but more importantly, we look at the bank statement of the person. So somebody earning 100,000 rupees, but spending all 100,000 or more than 100,000 as compared to someone earning only 40,000, but at the end of the month, the person has 5,000 rupees left on the bank account. So obviously, these kind of cues allow us to kind of detect, potential strain or the repayment behaviors. But repayment behaviors is also, and we are talking about factor number 3, the willingness to pay. Okay, this is more the behavioral aspect of payment. Do you know, for example, if you do not pay your water bill, your electricity bill, or your phone bill, you are listed on the MCIB. This means that if people are not paying their bills, or there are recurrent tendencies to have late payment, that reflected on the MCIB report, and we are able to pick that up and feed it on FinScore, the machine learning tool that we have developed, that we keep on strengthening to be able to look at the repayment behavior, especially the historical tendencies. So, and obviously from these three family of factors, we have got a whole host of other sub-factors, sub-parameters: credit repayment history, the amount owed, the length of credit history, the recent credit, the type of credit, and so on and so forth. And even looking at social demographic parameters. All in all, we are using more than 48 sub-parameters, and actually, I see it's mentioned 275. We are now actually nearing almost 300 different data points to be able to ascertain that the person have the capability to repay back, the capability and the willingness to repay back a loan. And very quickly, this is, for example, the different tools. This is FinScore, actually, the tool that we have developed to enable us to kind of very quickly do a robust simulation and test the capability of the person to be paid back. In this case, for example, you would see that the person had a credit history of 10.5 years, has taken 13 facilities over the year. The amount of credit taken so far is 6.1 million, and so on. the total number of areas, and also, in terms of the number of days that obviously, so you can see this is a very good profile. And if the person can still benefit from additional facilities, and in this case, it is most likely the person can get a loan of 100,000 rupees, be classified, can obtain a credit score of 564 with us, and that put the person in a A plus credit risk facility. We obviously can take other examples. That was a high end A plus, but obviously the same thing about C category. Uh, and you would see also there are alerts, there are flags. Okay, for example, facilities obtained in last 3 months. There might be people who have had facilities taken over the last 3 months. It's not a bad thing, but it is something that need to be flagged, because then you really would kind of look at whether additional facilities are causing strains on the repayment histories. Okay, so different possibilities, different duration, and so on. Now, you would say, okay, I see, okay, someone saying that if I've invested 5,000 rupees, and let's say the remote has not received, and so on. So the astuce, the thing that we've been talking about of how you protect, how you mitigate risk, and how you are optimizing your investment. So, for example, here, with 100,000 rupees, we encourage people to kind of spread that money. For example, here we are talking about 5, 9, 10, 12 loans being investment in 12 loans. So, for example, investing on one loan of 10,000, putting 10,000 rupees on one loan of A plus risk category. Now, bear in mind that A plus is a very low risk category, but at the same time, the return is also on the low side. But nonetheless, you would see that the return is still 8.15%. Okay. Likewise, you put two loans, you invest in two loans of, and you invest 12,500 rupees, in A loan categories. And you can keep on moving for C, for example, where the risk is medium risk and medium return, investing 5 loans of 5,000 rupees and earning up to 12% on that. So you can see the interest rate being shown and what you are earning in terms of return. Okay, so you would see that in this particular case, with a 100,000 rupees investment, over 1 year, that aggregate to 5.54% interest over 1 year, and therefore the return is 5,540. Well, I'm sure many of you are saying, well, wait a minute, you said you are earning 12% of interest. But that's normal, because bear in mind that if somebody has taken, let's say, 10,000 rupees and the capital repayment is 1,000. So after 1 month, after the first month, and after having paid 1,000 rupees, the person is no longer owing you 10,000. Now it's only owing 10,000 minus 1,000. That is to say 9,000 rupees. After 2 months, it becomes 8,000 rupees. After 3 months, it's 7,000. And therefore, the 12% is calculated on the remaining balance. So the principle is that it is a reducing balance, interest calculated on a daily basis on the reducing balance. But the important thing, as you can see from this slide, is that for the same portfolio investment of 100,000 rupees on the loans that we mentioned, after the first month, you have 8,795 rupees in your hand. Okay. After the second month, you have got same figure again. That is to say 17,590. After third month, it's 26,385 money in your hand on cash. So what does that mean? You can take your money out, you do it whatever you want, but you can also reinvest it. Okay, you can take that capital and the interest that has been earned. So out of the 8,795 rupee, you have earned 774 rupees as interest. So what you can do is basically you reinvest that earning. Okay, and if you are reinvesting, that is to say, you are compounding that return. Okay, you are compounding that investment, and this allows you to kind of move pretty fast, allows you to make things happen, uh, compound your return. And from this angle, when you look at it, and for the same portfolio, you see the return is now the total return, capital and interest, is 113,954 rupees. That is to say, you've made 13,954 rupees. In other words, an interest of 13.95, almost 14%. Now, this is a conservative portfolio. You can be more conservative, or you can be, depending on your risk appetite, you can have a more aggressive investment strategy. Now, also, some people might say, okay, yes, but I don't have time to wait every day and I reinvest. That's why we have created the auto investment tool, which enables you to set the parameters. And once those parameters are set, whenever there is a loan of a given parameter that comes on the platform, your investment is automatically made. Okay? So even the legal documentation, all the legal information definitely are generated automatically. Those documents. Now, as I mentioned earlier on, the 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 loans are posted on the platform. So our platform is FinClub.mu, FinClub.mu. If you go on the platform, you have all sorts of information, whether you're a borrower, you're a lender, how it works, and also the regulatory compliance features. Remember that we are regulated by the Financial Services Commission. Therefore, this means that on that you would also see a life loan section. Okay, a life loan section. And if you go on the life loan section, you would see the various loans that have been posted, the loan amount that the borrower is looking for, the tenor, the interest rate that will be paid to the lender. So you can have all the detail for the loan, the type of loan. Now, after you have invested, you can after they have invested, and when the money is raised fully, there is what we call a cooling off period. Okay, there is a 2-day cooling off period once the full amount is raised. Now, people who have invested will have the opportunity during the cooling off period to withdraw your investment. Okay, that also is through a process that you can withdraw. So basically, you still have the chance to decide, oh, maybe I have got better investment option, or I don't like this loan, or whatever. We through the dashboard that FinClub gives to lenders, you are in total control. You can do whatever you want. You would see the return, you would see the investment that's being made. So the same information, when we summarize it like this, you would see that the investment, the return on the investment is about 14%, 13.59. So it's quite interesting should you decide to, for example, have a larger portfolio, because as individual lender, you can invest up to 1.5 million rupees on the platform. And if you are as a company, you can invest 3 million rupees on the platform. This basically means that you can really build a large portfolio where you are mitigating the risk. And then obviously, as you move on, the possibilities of reinvestment becomes far more interesting. And these are the triggers I was mentioning earlier on. Basically, there are triggers, be it SMS, emails, phone calls, letters, visiting the clients also. Okay, some let's say if we see that there are signs of stress, we obviously visit the client, and if there are need for rescheduling of a loan, fortunately so far we haven't had to do it, because as I mentioned, the non-performing loan have been almost is zero. But should that happen, and this, we are in a business where things like that may happen, so it is possible then to have some form of rescheduling to be organized. But the borrower is kept informed and reminded, obviously, that he or she has to pay back. And that's also very interesting, is that because the peer-to-peer lending is regulated and there is a law for that, there are also tax incentives. The first 80% are completely exempted. So whatever the interest amount you are making, the first 80% are invested, are exempted, but you pay only 15% of the remaining 20%. 15% of the remaining 20%. That means that basically, excuse me, that means basically it's a little bit like the management companies in Mauritius. This is a little bit that. So technically speaking, you are only paying 3% of the total interest amount that you can obtain on a peer-to-peer lending platform. Okay, and in the event that there are default and you have lost your capital, you can recoup it on the tax you are paying, on the interest that you are earning through peer-to-peer lending platform, and it's not limited to one financial year. So you can kind of have it over 1, 2, 3, 4, or even more financial years. And obviously, we do have a lot of lenders who are increasingly becoming, very happy about the way things are evolving. And this is a long-term gain, whereby you can invest and have your return kind of reinvested, and having a lot of possibilities. Okay. So we have professionals also. So people who are, you don't necessarily, obviously it helps if you're tech savvy, but our lenders kind of range from people who have got limited IT expertise to people who are very professional in their domain. So as we mentioned, things are picking up. So as we are progressing, initially we started with a soft launch that was around until May, June. But after June, we really started to push things up, because we were also going through a phase of learning, educating people. Bear in mind that peer-to-peer is something new in Mauritius, so people need to be educated. Still a lot of work to be done. And this means that as we are progressing from quarter to quarter, volume is improving. The amount obviously is increasing. So in terms of loan, so far, the total amount of loan posted, okay, has been 14 point on the platform has been 14.1%. And we now see the l'effet boule de neige, as we say, getting increasing traction, and things are moving far more positively and inbound. As we mentioned also, bear in mind that, for example, we, FinClub, are basically giving people the opportunity to invest and earn higher return. But at the same time, we're also giving people the opportunity of transforming their life, starting small informal businesses. At the moment, we are not lending to SMEs, incorporated companies, but that will come soon. It is an incremental process that's being undertaken, which means that it's slowly. But for borrowers, basically, you definitely have to be 18 years or more. Uh, Either can be salaried employee, whether public sector or private sector, or you can also be a self-employed, or you have your own informal business, or a retired person, but then you have to demonstrate that you still have income over and above the old age pension that you are receiving. For example, you've got people who get returned from rent or keep on working and so on. So why not? The things definitely, it's picking up, and the interesting thing also is that, and this is, something that could have been taken negatively, but we also can look at it very positively. That when we started giving loans, many people who were coming to us initially could not get loan from other financial institutions. But through our machine learning FinScore underwriting process, we were able to kind of screen this out, screen those people out, give them loan, help them build their financial footprint. And what's happening? We see that now there are other financial institutions are willing to kind of buy those loans, okay? Which really, it's, as we said, we might look at it, say, okay, we are not happy, other financial institutions are buying the loan that we have funded. But then when you look at it the other way around, but if they are funding those loans, buying those loans, it means that those people have got good repayment capabilities, they are paying on time, and that is a kind of a way to for us, for FinClub, to say that, okay, maybe we are doing something excellent in terms of building people's financial footprint for them to be able to get loans elsewhere, but also at the same time, having that possibility of expanding our horizon, getting more lenders to build that comfort and eventually invest on peer-to-peer loan. We obviously have a very strong network. We work with, as we say, regulated by Financial Services Commission, but at the same time, given the innovative nature of the work we are doing, we got the RSL through the EDB, Economic Development Board. We also are working with Mauritius Research and Innovation Council, precisely because of the quality of the work, the innovativeness of the solution that we are progressing. We obviously are members of various local and international groups, networks, and so on. For example, the Africa Crowdfunding Association, AfriLabs. AfriLab is a network of African innovative incubators, accelerators, and so on. So it's a network of that, and also the ABAN, the African Business Angel Network. I see a few questions, which as I've been progressing, we have tried to reply. So today we do have a strong team of about 20 people who are based in Eben, and basically, having both a lot of IT experiences, because remember, this is a platform, it's an automated process. Whatever our banking partners, so our people who work with us, and as you can see, we've got more than 75 years of banking and financial experiences. So whatever improvement, expediting process, and development required, that IT team is able to kind of deliver. we also, it has to be underlined that, for example, we have got business experiences in more than 20 to 35 countries, excuse me, in 35 countries, and also working for a more accumulated experience, man-year experience of 92 years for the team that we have currently here. Voilà. Our contact detail, as you can see, we can be contacted by email, info@finclub.mu. Now, to be more precise, if you want to get more information from the lending partners that we have, so you can send at lend, L-E-N-D, at finclub.mu. If you want to apply for a loan, know more information about the loan, we obviously, you can send an email to loan@finclub.mu, but we can also be reached through phone. The number is 468-7400. Excuse me. We also have a WhatsApp number, which is 5252-7400. That we can be contacted through chat, and we would be more than happy to answer any specific query that people might have. Voilà, I think we have got, excuse me, the WhatsApp number is 525500. Okay, the WhatsApp number is 525500. So we can be contacted. I think I have run through almost all the questions that were raised. As we move forward, remember that ours is a peer-to-peer lending platform. So we are putting people who need money, borrowers, directly in contact with people who have got money to invest and therefore looking for higher return. This means that the intermediaries are quite light. I mean, the only intermediary in this case is FinClub, and we do not. We are operating in a very high IT technology environment. For example, our contract automated, generated automatically. The signatures are digital. The information are displayed on the lender dashboard. The borrower has got his or her own information on the dashboard. This basically is make things easy. Actually, sometimes we do receive complaint that we are giving too much information and it tends to confuse people. But that's where we are open for information. That's where we are also open to holding lender clinic where we are creating them. One might obviously ask as a last question before we close, what are the costs and what shall I do and what is the minimum investment on FinClub platform? Number one, as I mentioned, if you are a lender, there is absolutely nothing to pay. Whether you open the account, whether you are investing, whether on the return you are getting, all of them are, there's absolutely no fees attached to that. Okay, that's number one. Number two, on the contrary, may I ask, right. On the contrary, as I shown earlier on, you're only paying 3% tax on the interest that you are making. So even if you earn 1 million rupees of tax, for example, you are only paying 3% of that amount, which is really kind of extraordinary because in many other, if not all other circumstances, the taxable amount is high. Okay, so that number one. So in terms of costs, the number 2 point that was raised is basically what is the minimum amount. Now, you open your account online, and it's fairly quickly. Okay, it can be done in 2-3 minutes, 4 minutes. Let's maximum 5 minutes. But you obviously need to have your ID front and back available at hand. You need to have a proof of address available at hand, and you also need to have your birth certificate all that need to be uploaded. Now, we also need the top part. We don't want to know about your financial detail, just the top part of your bank statement. So where is your bank? And the bank account details. We just need that top part. So those information. So to open an account, once the account is open, we do a video KYC. So in most circumstances, the person doesn't have to come to our premises. So we do a video KYC. Once that's done, your account, your dashboard is activated. The dashboard is activated. Once the dashboard is activated, you transfer your money to our on our account, on our segregated account. So that's a dedicated account only used for lending and borrowing operations. And the minimum amount you have to transfer is 5,000 rupees. So once you transfer 5,000 rupees, you have access to your dashboard. That 5,000 rupees is shown there. And once you have money on your account, on your dashboard, you can start investing. And as again, I mentioned earlier on, the minimum amount that you can invest on any one loan is 1,000 rupees. So minimum amount is 1,000 rupees per loan. Voila. I think I have more or less answered all the questions that were raised. And in a way also I have run out of time because we've just passed the 1 hour mark. And in the spirit of efficiency, we've tried to, I think, not only make a kind of elaborate presentation, but also at the same time try to answer all, if not most, if not all the questions that you had. I did also mention the cooling off period, that once you have already committed for a loan, after the full amount is raised, you still have 2 days to be able to pull back your investment so you can change your mind. Well, now we therefore look forward. We hope that we have been able to kind of tell you a little bit more what is peer-to-peer lending, in particular what is FinClub peer-to-peer lending, how you can make money, how your investment is protected with us. So please go ahead, open your account, send us your email or WhatsApp message, or phone us if you have any query. The phone number is 468-7400. The WhatsApp number for only messaging is 5255-7400. We also present on the social media platform, Facebook, LinkedIn, TikTok, Instagram. So please do follow us. And obviously, we look forward to having you guys as client, whether as borrower or as lender. Thank you very much and have a nice afternoon. Thank you. Bye-bye.